All right, options traders pricing in a 1% move on the S&P tomorrow. That seems like complacency. Why such a, it seems like kind of a muted move, even though the markets have been muted over the last few weeks.
Yeah, well, actually, if you look at kind of the statistics on daily moves on the day of the FOMC announcement, over the last 4 or 5 announcements, it's actually been incredibly muted. We've been seeing average absolute moves of under 30 to 40 basis points. So the fact that right now we're pricing in over around 100 basis points is actually above average compared to the last 4 to 5 interest rate announcements, basically since we started cutting interest rates. So the markets are seeing a little bit more angst with regards to this specific FOMC decision. And I think that's as a result of the fact that, one, you have a record number of dissenting votes in terms of governors that have publicly spoken about expecting that this particular December rate cut, they should be holding rates as opposed to cutting rates. And then you also have the fact that at the moment, the bond market is only pricing in around 20 to 30% chance of a rate cut before June of 2026. Yet we know that the incoming Fed Reserve president that's going to serve after Chairman Powell will likely have an interest in cutting interest rates faster than that. So, we have some dissenting opinions right now. And I think that's really what's driving sort of the angst from investors. We see that the VIX has picked up quite a few percentage points over the last couple of days. And even yesterday, we saw a really large print here on the VIX, a really interesting trade. It's a bit of a hedge against potential volatility here between now and that December expiration. It was over 52,000 contracts of the December 20 by 25 call spread, paying a little over 28 cents per contract on that. That equates about a $1.4 million bet that VIX could be as high as 25% by that December expiration. And if that does happen, they're going to get a net profit on that of nearly $25 million on that $1.4 million outlay.
All right, that's a very aggressive play out there with the VIX. But you're really hitting on something I want to talk to you about. The idea that this is a bit of a different Fed meeting, that more than likely we're going to see a hawkish cut, and the fact that we're going to see changes to the FOMC. And you threw in the other thing, the dissenters. We were showing some of the Kalshi data a short time ago. 50% chance of 3 dissenters at this meeting, according to that Kalshi data. How does that impact where people want to put their money in the options market? You mentioned the VIX, people trying to play the volatility play. But what about other parts of the market, like the Mag 7, tech, et cetera?
Yeah, so I mean, the dissenting votes is going to be seen through the dot plot, and I think that's going to have some effect. I think more so, perhaps less, in my opinion, less so on the Mag 7 at the moment, and more so perhaps on the rest of the market. The rest of the market that is playing a little bit of catch up. You had noted that small caps is making an intraday high here prior to the FOMC meeting. We're actually seeing kind of the value stock small caps play catch up here, while Mag 7 kind of lags behind a little bit. There certainly is some concerns with regards to the amount of debt that Mag 7 is taking on with regards to chasing their AI dreams. But overall, I think the bigger implication for the market is actually going to be the rest of the market. Specifically, you look at financials. Financials, generally speaking, have been performing quite well, with the exception of JP Morgan's news yesterday. But overall, I think that's really going to be the cohort that's going to be more sensitive to interest rates going forward.
All right, Tony, before we let you go, got to ask you about Oracle coming up. A lot of the action on Oracle has really been driven by sentiment, it seems at least, on OpenAI, and people viewing it as somewhat of a proxy for OpenAI. Really quickly, what action are you seeing in the options market ahead of these earnings?
Yeah, the stock has pulled back substantially here, and I think there's some investors betting that maybe if Oracle beats earnings here, we could see a bit of a move here to the upside. So we saw, nearly 2,000 contracts of the December 26th weekly expiration, the 225-240 call spread trade at just under $5.50. That's laying out around $1 million in premium to potentially make 1.8 if Oracle is above 240 by that December 26th weekly expiration.